Kamino Finance is one of the fastest-growing DeFi protocols built on the Solana blockchain, aiming to automate complex yield strategies and simplify liquidity provision. At its core, Kamino is focused on boosting capital efficiency by automatically optimizing liquidity positions in concentrated liquidity DEXs like Orca and Meteora. The protocol was developed by the team behind Hubble Protocol and has become a major player in Solana DeFi, especially since the rollout of their isolated lending markets and vault products. The team behind Kamino is composed of veterans from the Solana ecosystem, most notably Marius Chubotario, who also worked on Hubble. Their deep understanding of both the technical stack and user experience challenges has helped Kamino grow organically through product-market fit rather than hype cycles. They've maintained a low marketing footprint and focused heavily on community-driven governance and open-source code contributions. Kamino's history starts in early 2022 as a liquidity optimizer built atop Orca's CLMM pools. The early traction came from automating yield farming strategies for Solana-based assets without requiring users to manage active liquidity ranges manually. This concept resonated strongly with users who wanted higher yields without having to micromanage positions. In mid-2023, Kamino introduced lending vaults and composable leverage, dramatically expanding its utility and placing it alongside other protocol powerhouses like MarginFi and Solend. The project's GitHub activity remains consistent, with a focus on smart contract security and yield optimization strategies. There are a handful of public repositories under the Hubble and Kamino GitHub organizations, including audits, lending market logic, and automation tools. While it doesn't have hundreds of repos, the ones it does maintain are actively updated and critical to the protocol's core functions. Recent updates have included integrations with Jupyter Aggregator and new automation logic for yield-bearing strategies. Tokenomics-wise, Kamino operates using the KMNO token. KMNO has a fixed max supply of 10 billion tokens. A large portion is earmarked for community incentives and liquidity mining. Approximately 25% is reserved for the team and advisors, with a 1-year cliff and 3-year vesting. Another 20% was allocated for strategic investors across 2 funding rounds. Distribution so far has been primarily via airdrops and LP rewards, and future unlocks are scheduled quarterly, with transparent emissions data published in their docs. The KMNO token's utility spans several areas: staking for protocol fees, collateral for isolated lending, and governance voting. Kamino is also exploring VE tokenomics to allow time-locked voting power, potentially encouraging long-term participation. As TVL grows, the KMNO token could see more value accrual, though currently it's mostly a governance and reward mechanism. The Kamino whitepaper is a dense but accessible breakdown of how concentrated liquidity, leverage, and lending are fused into a unified system. A key innovation is how Kamino allows LP tokens from yield vaults to be used as collateral in lending, turning passive yield strategies into actively leveraged positions without extra risk exposure. Their architecture relies on Solana's low-latency infrastructure, enabling frequent rebalancing and precision pricing that wouldn't be viable on higher gas L1s. According to DeFiLlama, Kamino's TVL recently surpassed $400 million, a staggering increase compared to its $50 million baseline just months ago. The majority of this TVL is spread across Solana native assets like SOL, JITO, MSOL, and stablecoin pairs like USDC, USDT. Kamino's revenue primarily comes from LP performance fees and lending spread margins, with a smaller portion directed to the treasury. The protocol's financial sustainability looks strong. Kamino has avoided hyperinflationary tokenomics and focused on building utility before pushing token incentives. Its reserve fund, funded by protocol fees, is used to bootstrap new vaults and pay for audits and development. Unlike some competitors, Kamino has yet to suffer a major exploit or insolvency event, a testament to their cautious rollout and emphasis on security. There are no major regulatory flags currently associated with Kamino. Because it operates permissionlessly on Solana and does not handle fiat onboarding, it falls outside most regulatory perimeters. However, future scrutiny may come if KMNO is deemed a security or if leveraged products invite CFTC attention. The team is aware of these issues and has made compliance-based moves like publishing legal disclaimers and decentralizing governance. Kamino's roadmap includes several major milestones: the introduction of cross-margin lending accounts, Ethereum L2 expansion, a mobile-friendly UX overhaul, and deeper integrations with Jupyter and Solana Pay. One of the most anticipated features is Kamino Points, a system for rewarding protocol usage ahead of further KMNO distributions. They also plan to launch permissionless vault creation tools and analytics dashboards for pro traders. In terms of delivery, Kamino has largely kept its promises. Features like vault rebalancing, lending markets, and token launches were all delivered in line with roadmap targets. The Kamino Point system is already live, and future governance proposals include DAO-managed treasury allocations and multi-chain vault deployments. That is the end of this 10-min deep dive. If you found it helpful, consider liking and subscribing to the channel and tell us what project you want us to cover next. Your feedback drives our research. See you in the next one.